Good morning, UPBOptionMillionaires.com on Cyber Monday, December 1st, 2014. Welcome to a new month. We're being welcomed with lower stock prices. Stock futures are lower, down almost 0.4%, which these days is a market crash. I'm surprised the market's not halted. Ha ha ha, really funny. You can see the pullback we have here. Is it going to be a V-bottom type pullback? And each of the pullbacks that we've seen since the lows of March 2009 has been a great buy the dip opportunity. So you would expect this one to be exactly the same. The question is, where does it stop? Where does it stop? Does it stop down here at support, or does it stop right here and now? And we're going to see a move up to higher stock prices every single dip. I mean, the dip, look at this buying frenzy off the lows we saw in October. Each of the dips, especially off this pullback here, look at the dips. I mean, we have nary a big red candle here because the dips are just not being allowed to continue to dip. They're just getting bought hand over fist. Crude oil is pulling back. Back in the summer, we had the Middle East conflict. JB at OptionMillionaires.com was talking about how everybody was, trying to inflate oil when, in fact, it would do the exact opposite, which it has. Look at this pullback. And it's you might say this is some sort of capitulation sell-off, but for me, you flip this chart upside down. If this was an uptrend, I'd have a tough time going long, but I'd also be wary about going short. The same thing here. I'd be worried about playing for the bounce, although we're getting it here quickly off the European Open. We have a nice bounce. Same with gold, which has been pulling back handsomely. You can see a nice bounce when the European markets open, and we're pulling back a bit. The same kind of chart that has been just in a complete downtrend. The theme also, and you can look at the highs we saw earlier this year, the theme also is the dollar index, which continues to rocket to the upside. A lot of it has to do with Abenomics. Abenomics started to devalue the yen. The dollar-yen cross was at 75, something like that. But you can see the dollar index continues to churn to the upside. Let's look at some charts here. And this is the USO, which tracks oil. I would look for support here at about 2250. You can see it's broken out of this long-term channel. That is bad. FCX have been talking about this one for years. Put in a nice head and shoulders pattern. Thought it was going to break here back at the middle of 2013 to lower prices. Here we are again at this neckline. Okay, it's an extended neckline. It's a neckline from somebody on a some far off planet where they have four shoulders. So the fourth shoulder, on the fourth shoulder, the stock plummeted. And you can look, we get back to the support line here at about 25.82.16. We break that, and it's going to be on, people on stock twits were kind of angry with me for saying that the stock is going to head to about, $15, $10 over the long term. And we'll see. I think that's a distinct possibility going forward. So we have oil. Let's look at silver, which is continuing now back in a downward channel. The underside of that's almost $10. Gold as well was on the upside of this downward channel, descending channel here. It's going to break below it this morning. And we're going to be back down. Probably find support at about the $85 level. Pretty wild. Again, the S&P 500. The trend is up. Look at that. We have the Abenomics low in 2012, which provided support. And now we're just blasting higher, respecting that trend line. The brief decline that we saw back in the middle of October was, again, swiftly bought. A nice wick there. Beautiful action. We'll see if this pullback, again, if you want to look from this trend line perspective, support from this trend line is going to be at about the 201.50, 202 level if we do pull back. That'll be the Abenomics trend line support. We got to hold that. If that breaks, it's going to be a big problem here for stocks. FedEx, which broke out to new all-time record highs on Friday before pulling back. This might be a gap that gets filled here this morning, 175. And if you want to look just from an options perspective, nobody's looking for downside in this market. FDX, the 177.50s that expire this week, my goodness, I mean, look at this. $1.16, and they were even lower than that intraday on Friday. The 175.40 cents. I mean, whew, you make a lot of money to the downside. Again, trading options, you make. My best days trading out of the money stock options have been in a down market when the market just gets pummeled. Goldman Sachs, look at some of the financials here. Goldman Sachs off its highs here, but consolidating. There's a beautiful bull flag. And I think if the selling doesn't persist too long, we could see Goldman Sachs over $200 a share. 3M, which broke out off its earnings report to record highs, consolidating here. I mean, you see some of these stocks like 3M, Home Depot, some of these Dow Jones Industrial Average components that, look at this long-term chart from Home Depot. It's like they created the wheel. Look at this. It's like back in 2000, it was at $27, and then suddenly, like, hey, Home Depot is going to branch out into, the tech sector. I don't know. Look at this move, especially the last couple months. Just a massive move to the upside. Home Depot was up on Friday. Let's just look at the last 5 days. Yeah, you can see the gap up here on Friday after the Thanksgiving Day sales. So we'll see where that heads today. Amazon came out. Online sales are doing well. Today is Cyber Monday after all, so we could see a nice move up in Amazon. Upgraded on Friday. You can see the nice move up. And if you look from a long-term chart perspective, I like Amazon. I think Amazon's going to head back over $400. Hit support here, long-term support. Gets over this level at about the 365, 370 levels. Probably going to head back over 400. Google remains in that holding pattern at support. If it breaks here, again, we could see significant downside for Google. But I'm looking for higher prices here into the end of the year. And finally, the bond market continues to be well bid. Okay, stocks are being bought, bonds are being bought. Namely junk bonds, and that's what we have to watch, junk bonds. I'll bring that chart up real quick, and you can see we get a nice little red candle here. Junk bonds start to pull back. I think we're going to see the stock market start to pull back, but until that happens, look at TLT. Bonds continue to be bought in this marketplace where you have bonds in Spain and Italy yielding less than here in the U.S., which makes perfect sense, doesn't it? It really doesn't. All right, UPB here, optionmillionaires.com. Big lots of chart I bringing up for weakness. Broke through to the upside. So again, bearish chart patterns just don't work so well. Look at Costco breaking out to the upside. Look at this back in 2009. This is a $35 stock, $140 for Costco. And we have Ross Stores. I played it for earnings for downside. Broke out of this megaphone topping pattern in a big way. I mean, look at that. That's not wrong. That's wrong with an exclamation point on it. So, I'm not always right, but when I am, I'll be sure to tell you. All right, UPB, optionmillionaires.com. I'll see you in the chat room. It was a great day in the chat room last week. How about Facebook? Facebook had that chart really is not going to tell you where it did, but look at that move we had up on Facebook. See this chart here? Perfect. You pull these trend lines up, we break it. Also, Twitter last week worked out very nicely off its lows when it was under $40. All right, UPB, optionmillionaires.com. I'll see everyone in the chat room. Have a great start to December. Goodbye.